Good afternoon, everyone, and welcome to the FX Daily Roundup. I'm filling in today for Blake. He had some technical issues, actually some internet issues. So he wasn't able to go and do this kind of a last minute thing in the sense that I'll try and go over this quickly for y'all. Give a wrap up. We obviously the main story today, so to speak. It always is a coronavirus, but actually we're going to go in and take a look here with the cable, and Bank of England did not go in and cut. We had been looking actually since the beginning of the week at this key level, the pivot, and we thought there might be a chance that they could go in and cut. We were saying here, kill bears, keep the pressure on, fading the rally ahead of the BOE. Now, this analysis was done in the Asian session last night. The likelihood of the rate cut has increased. Obviously, they didn't cut. Support will be 29.56, just below that pivot, and resistance would be 30.83. Now, we're above that 30.83, and the reason that is going to be key because that's that key weekly level that we've actually tagged for the last 2 weeks in a row, and we just keep coming up short. Last week, we were actually well above it. And when we had some data released while we were on the European crossover webinar, we were just above 31.66. And then right off, as soon as they released the data, it just started fading, even though the data, I believe, at the time was positive. And we just kept fading and fading. So we had two back-to-back weeks with the cable failing at the 30.80. We're back above it now. Maybe the third time's a charm, but keep in mind with that 30.80 is going to be key on a weekly level. But we've been there before on a Friday, actually during European crossover webinar, and we've seen it fade. And last week was just more pronounced as we actually were above 31.66, and we just kept selling off to the point that we, sold off essentially 100 pips before they closed and ended up closing the week lower. So we'll have to go in and keep an eye on that. You have to keep an eye on that really with all the cable pairs, or I should say British pound pairs. We're seeing that even with the sterling versus the Aussie dollar. I took a poke here on the short side, and actually it was a quick scalp. I got stopped out. We pushed up higher, but really that wasn't the pair to really go. If you're looking for the Aussie to kind of make a hold, the pair to take a pot shot at actually was the euro, because don't forget, we just mentioned about the cable. It's actually pushing and potentially pushing back up to, breaking out. So once again, it's the old saying, you want to sell the weaker sister. Who's been the weaker sister? The euro. So actually, not that we've seen big moves, but you did get some nice little scalp moves in the euro versus the Australian dollar. The last time I was with y'all, I don't know, it might have been a few days ago, I don't remember, maybe it was last week, I said, you may want to consider taking a look at these cross rates. Sometimes we haven't been getting the movements, in the majors, which are going to be the dollar pairs, and quite often this can, assist you, because like I said, I took a pot shot at the sterling versus the odd, but actually the better trade on a percentage standpoint, if I was taking a scalp there, was actually the euro versus the Aussie, because it's the cable or the pairs that actually had the potential to maybe go in and break out. And as bearish as it was, you got to think about this, as bad as it looked last weekend when we closed and, we got above 30.80 2 Fridays ago, and then we rolled back lower. Then we rallied up to 31.66. I mean, it looked about as bad for the bears as you can possibly think. So when we started out the week, our analysis was, hey, the market is going to be focused on the 29.80 level. We've joked about this. This 29.80 level has been in place since before Moses crossed the desert. So they certainly had the momentum to move lower. And we did make it down to 29.80, twice, but we're actually holding above that area. So potentially, like I said, you would have thought the bulls would have said, no way, you're not going to fool me anymore. But we are above the 30.80. Is third time the charm? I don't know. A lot of folks were looking for the Bank of England to go in and cut, and they did not cut. And then on top of that, technically, we're still holding up well. So let's see how we play out tomorrow. But keep your eyes focused on the cable. Moving on to as far as the euro dollar. Euro dollar, we did move off, and we're looking at the analysis that we were actually preparing for the European crossover webinar. We did move off of those lows yesterday, but we have not been able to push higher in our bias chart analysis. Let me pull that up quickly. Sorry about that. this happened to Blake just rather quickly, and then I wasn't sure whether he was going to do the show or not. So, but let me go and pull that up. So I'm kind of pulling stuff up off the fly. So our bias chart resistance is still 1058. This is actually from the other day, but it still remains in place. Let me move this out of the way. And so in the analysis here with the euro, the bears still have control here, and it certainly looked like we'd have to push lower before we could potentially turn higher. We'll see what happens, but the resistance is 1058. Bear with me. So we still have this head and shoulders in place. We'll see how we finish it out. One of the things I always focus on is that the euro dollar comprises 56.4% of the cash dollar index. So they trade inversely. And so one key level that we're looking at as we go into tomorrow, we talked about it since the beginning of the week, is this 97.89 now. We actually got above this 42, which opened the door for, you know, some additional buying. And you can see here we took out the trend line. But the key is this weekly pivot. And this pivot goes back, boy, if we talk about since Moses crossed the desert, boy, this goes even before, almost seems like before time. Actually goes back, I think it's like 3 years almost, or yeah, to 2017. And so if we can close, that's the key. So today's resistance, let me see here, we were looking at this, said, the dollar index has sustained its move above 98. Resistance is 98.40 to initiate a leg to challenge new highs above 99. Support is a weekly pivot of 97.89, and you can see we're just slightly below that. If we can push a little bit lower as we come into tomorrow, that's obviously going to push the euro up. But once again, with the euro, we're looking, you know, on the upside, you know, for the euro is going to be a 1058 that we're looking at resistance. You can see it coming in right in there. You see there? And that's just only on a 2-hour chart. But 1058 will be the resistance. We are seeing a little bit of a push here with the peso. Let's go and take a look here. Actually, it'd be better to look at this on a daily. We're seeing that push here in the peso because of the weakness we're seeing in equity markets. And our analysis for today, let me see, we had it, dollar peso understandably finished on the weak side in light of the strong rally in equities for the majority of the day, referencing yesterday. Support is 1865, confluencing with the 1862, the 161%, and that's of this recent failed rally, okay? With resistance at 1888. Well, we're at 1885. SPOOs are here at 32.51. Now, we do have Amazon earnings after the bell. So my thought is that we're probably going to go on and maintain a bid before the close, but we're certainly still, let's take a look here with the SPOOs. So we're certainly here on the weak side. I still think that, I don't think the wheels are going to completely fall off the caboose. Obviously, the concern is with the coronavirus. We'll see how we play out. 32.92 or 93 actually was the key level on this way back. It looked like they might make it up to about 32.70-ish. And we paired back, but we had early this morning, we had 32.65 we're looking at and thought they may make one more push above it before rolling over. But we've had some more coronavirus headlines come out. Obviously, has gone and weighed on the SPOOs. But I don't think that even if they trigger some stops here, earnings after the bell, Amazon may keep this from completely rolling over. We'll see if we don't get a little bit of short covering ahead of the close. Another market that's moving also is going to be the crude oil. And I'll pull that in here. You can see that weakening. Actually, when you look at this on a much shorter time frame, looking here on a 5-minute, we actually had a nice little bear with us. Nice little head and shoulders coming in here. And it's actually opened the door for this to move lower. Actually tried to rally up earlier this morning, but as the SPOOs started to turn away from that 32.65, then we saw this market, you know, coming apart here. And you can see here. We'll see what happens. We have some key support there at the 51.80-ish area here. Obviously, we're breaking below that. And let's go and pull this into a daily. And I'd be looking for right there. Hang on one moment. There you go. 51. Bear with me. About 51.42. 51.42. Actually, it's a little bit higher. Sorry about that. About 51.42, 51.40. Once again, sorry, I apologize. Like I said, it was kind of last minute. Me to fill in for Blake, so I didn't have everything all perfectly set up, if you want to call it that. But you can see here the pressure coming down here. Now, one of the things I did go and focus on that I looked at, if you're trading the crude, bear with me. Let's just go to a 30-minute. Was to go and do and we actually made it down here because this was 127% extension of this most recent, one called a failed rally. Let's pull this back. There we go. So you can see here we're at the 127%, getting a little bit of buying ahead of that. 161% would take us at 51.44, and we've got a nice confluence of some volume support down there at that 51.44/40. Keep that in mind if you see this thing continue to go on and roll over. Obviously, we've, like I said, that rally back up. We actually had come off. You can see here where the market had some good resistance coming in right here as far as volume, and that's right where we kind of rolled off from here, and we opened the door. And actually, if you look at it, we actually had a 5-minute head and shoulders that actually opened the door for us to move lower at the time, which is going to be around 52.05-ish. And then you can see here, we took a dip, we rallied up to the 15.204, and here we are rolling back down again. The reason I wanted to focus on those two, obviously they're driving as far as volatility in these markets for right now. Looking across at other pairs, let's go and take a look real quick with the Aussie dollar. We're at some key support here at the 67.08. Let me see here. The Aussie finished the day slightly lower post FOMC within a tight range. Levels remain the same. Support into Tuesday is, well, because that was, delayed over. It didn't carry over. But anyway, it is resistance, or headed in reverse. Support is 67.08, and that's where we are right now. That level still remains the same. I didn't update it. We did update the analysis on the Asian in the ForexAnalytix notes here under basic technical, but I guess I didn't get a chance to update in my notes on the chart here. But I still like this 67.08, and we're holding in this area here. You can see right there. Other pairs, like let's say sterling versus the yacht or euro versus yacht, have been able to break to new highs, but the Aussie dollar, we're still holding up in this area. But we're clearly bearish because we talked about this since last week, the importance of the 68.48. And when we closed below it, we spent 3 days below it, and then finally we broke lower. And then, of course, falling off this trend line really opened the door for us to move lower. Now, we had good employment data from the prior week, which kind of potentially negated the possibility of a cut by the RBA, but it's still there. I mean, we've had weak consumer spending as well as the Australian bushfires. And now with the Chinese, with the coronavirus, certainly that's going to have its own negative impact here for the Aussie dollar. And as many of you may know, the Aussie dollar quite often is traded as a proxy for China. So you can certainly understand why you would have that continued, pressure. Even though, like I said, it appears that maybe after getting good data, we may not go on and see the RBA cut, but you know what? We may get a cut after all here. Let's take a look. Oh, so also here with the dollar yen here. One of the things that's coming up with the dollar yen is if you look at U.S. rates, I did go on and post in Twitter in the Asian session. I think it was it was late Asian session. I think it was right around maybe 10 p.m. Eastern time. But anyway, the 10-year had already gone down to 156, and certainly that has impacted. One of the things that's happened here with the dollar yen is we didn't open up as weak as I thought we should have on Sunday evening. We saw the market come back, but the equities had rallied back rather strongly, and the dollar yen couldn't even get past the pivot of 927. And even post FOMC, we didn't do a whole lot, but we've seen it continue to weaken as the main driver has actually been U.S. rates as far as them moving lower, moving to new recent lows here in U.S. rates, as opposed to the equity market. So the door's still open for us to move lower. We actually had some minor support at 778. We saw the market kind of bounce off of that, but we're still seeing this continue, and I'm at 878, still continue to drive lower. The next key level is going to be 778. Ahead of that, you can see some support here coming in right about 840, maybe 836. So it's just something to go and keep an eye on. But if you're trading the dollar yen, keep your peepers on the 10-year note. Because that's what's driving this, what the dollar yen is actually reacting to. It's not actually reacting to equities. Even when equities have moved higher, it's not wanted to rally in kind. And when equities have pulled down, it has come lower. But it's been like, why isn't it moving? Well, now that U.S. rates are moving, now we found what this market is really focusing on for the time being. And so you want to keep your eyes on the 10-year note. That's all we have. Like I said, keep an eye, as I mentioned here, on the crude. We do have 161% at 51.44, also confluencing with the level of support there at 51.40. That may give it a target for these guys and gals to go in and run for. And I think, like I said, I don't think the SPOOs are going to completely come apart ahead of earnings, but we shall go and see. With that, thanks for joining us here. Once again, you may want to go and consider a trial with ForexAnalytix. Like I said, we cover all the different disciplines, whether it's basic, technical, macro, harmonics, Elliott wave. Then we've got the chat room. We also have the patterns in play that Blake and some of the other guys go and put out there. So once again, take advantage. It's $1 for a 10-day trial. You get full access. And once again, thanks for joining us here on the FX Daily Roundup, and good luck trading the rest of the day.